In this video we are going to talk about dividend stocks that raise their dividends. So before starting, please like this video and subscribe to this channel for future updates. It's not easy to invest in dividends. That's why skilled income investors consider a variety of factors when deciding which stock is best for their portfolio. Payout ratio, price-to-book ratio, Sharpe ratio, and even the frequency of dividend increases over specific time periods are all important measures. Only by carefully studying these criteria, as well as others, can one be reasonably assured about investing in any company, including well-known names like ExxonMobil Corporation, NYSE, XOM, Microsoft Corporation, NASDAQ, MSFT, Apple Incorporated, NASDAQ, AAPL, and PepsiCo, Incorporated, NASDAQ, PEP. When it comes to dividend stocks, however, one must consider the dividend history of the company in question. Companies that have recently slashed or eliminated dividends may not be the best investment options for any investor, whereas those that have consistently increased their yields, such as dividend aristocrats with 25 or more years of consistent increases, or dividend kings with 50 or more years of consistent increases, may be good choices. We should include yield as a decision factor in these dividend stock categories as well, especially in rising rate settings. Global X, for example, has some intriguing results on the profitability of high dividend equities in rising rate settings. From 1960 to 2017, the study looked at the performance and behavior of the highest decile of dividend yielders in order to find solid proof that high-yielding dividend equities can, and have, outperformed the market as a whole. For starters, during the time period examined, these stocks managed to create an average yearly dividend return of 6.4%. Second, between 1960 and 2017, it was calculated that the highest-yielding stocks beat the S&P 500 by around 3% every year. Finally, over the analyzed time period, dividend companies with higher yields outperformed the S&P 500 at an annualized average rate of around 0.8% in 7 out of 10 increasing interest rate periods. As a result, there is a compelling case to be made for high-yielding dividend equities, particularly in times of rising interest rates. Even for the smart money, investing is becoming more difficult by the day. The new financial landscape is reverberating throughout the hedge fund business. Its image has been tarnished in the recent decade, when its hedged returns failed to keep up with the market indices' unhedged returns. On the other hand, was able to predict ahead of time a small set of hedge fund holdings that had outperformed the S&P 500 ETFs by more than 124 percentage points since March 2017. Our monthly newsletter's stock choices returned 186.1% between March 2017 and July 2021, compared to 100.1% for the SPY. By more than 124 percentage points, our stock recommendations outpaced the market, see the details here. As a result, we believe hedge fund sentiment is a valuable indication that investors should monitor. To receive our stories in your inbox, sign up for our free newsletter on our homepage. Number 5. Walgreens Boots Alliance Incorporated, NASDAQ, WBA. The Walgreens Boots Alliance Incorporated, NASDAQ, WBA, is a holding corporation that owns and runs the Walgreens and Boots retail drugstore chains. On our list of dividend stocks that raised their dividend in 2021, the company is ranked 5th. Truist has a hold rating on Walgreens Boots Alliance Incorporated shares as of July, NASDAQ, WBA. This rating comes with a $52 price target from the business. Walgreens Boots Alliance Incorporated, NASDAQ, WBA, reported an EPS of $1.38 in the fiscal third quarter of 2021, exceeding projections by 23 cents. The company's revenue was $34.03 billion, which was $526.6 million higher than expected. Walgreens Boots Alliance Incorporated, NASDAQ, WBA, has gained 19.44% this year and 42.51% in the previous year. Walgreens Boots Alliance Incorporated, NASDAQ, WBA, was owned by 41 hedge funds out of 873 monitored at the end of the second quarter of 2021, for a total of $1.1 billion. This compares to 41 hedge funds with a total position worth of $1.1 billion in the previous quarter. Number 4. National Retail Properties Incorporated, NYSE, NNN. The Real Estate Investment Trust National Retail Assets Incorporated, NYSE, NNN, invests in high-quality retail properties with long-term net leases. The company owned and operated over 3,114 properties in 48 states with a gross leasable area of approximately 32.4 million square feet as of September 2020. On our list of dividend stocks that grew their dividend in 2021, it ranked 4th. In July, Wells Fargo boosted its price objective on National Retail Properties Incorporated, NYSE, NNN, to $50, up from $44 before. At the same time, the brokerage reiterated its equal weight rating on the stock. National Retail Properties Incorporated, NYSE, NNN, reported a 70 cents FFO in the second quarter of 2021, exceeding expectations by 2 cents. The company's revenue was $179.01 million, up 9.35% year-over-year and $2.01 million higher than analysts' expectations. National Retail Properties Incorporated, NYSE, NNN, has risen 5.38% in the last 6 months and is up 14.99% for the year. National Retail Properties Incorporated, NYSE, NNN, was owned by 19 hedge funds out of the 873 monitored at the end of the second quarter of 2021, for a total of $188 million. This compares to 22 hedge funds with a total position worth of $289 million in the previous quarter. Number 3. International Business Machines Corporation, NYSE, IBM. The New York-based International Business Machines Corporation, NYSE, IBM, is a technology and computer hardware corporation. It has a global presence in over 171 countries, and is ranked 3rd on our list of dividend stocks that increased their payout in 2021. Morgan Stanley boosted its price objective on International Business Machines Corporation, NYSE, IBM, to $164 in July, while maintaining an equal weight rating. International Business Machines Corporation, NYSE, IBM, posted an EPS of $2.33 in the second quarter of 2021, exceeding projections by 4 cents. Revenue was $18.75 billion, up 3.43% year-over-year, and $447.5 million higher than expected. The stock of International Business Machines Corporation, NYSE, IBM, has risen 7.77% in the last 6 months and 10.55% this year. By the conclusion of the second quarter of 2021, 41 hedge funds out of 873 tracked owned a $1.4 billion investment in International Business Machines Corporation, NYSE, IBM. This compares to 41 hedge funds with a total position worth of $1.4 billion in the previous quarter. Number 2. Star Group, LP, NYSE, SGU. Star Group, LP, NYSE, SGU, is a utility company that provides residential and commercial consumers in the United States home heating and air conditioning products and services. On our list of dividend stocks that raised their dividend in 2021, the company is ranked 2nd. Star Group, LP, NYSE, SGU, reported a $0.30 EPS in the fiscal third quarter of 2021. The company's revenue increased by 43.93% year-over-year to $213.01 million. The stock of Star Group, LP, NYSE, SGU, has risen 0.39% in the last 6 months, and is up 10.47% year-to-date. Star Group, LP, NYSE, SGU, was owned by 11 hedge funds out of the 873 monitored at the end of the second quarter of 2021, for a total of $68 million. This compares to 6 hedge funds with a total position value of around $60 million in the previous quarter. Number 1. Altria Group Incorporated, NYSE, MO. One of the world's major tobacco corporations, Altria Group Incorporated, NYSE, MO, sells cigarettes and other tobacco products all over the world. On our list of dividend stocks that raised their dividend in 2021, the company is ranked first. Stifel reiterated a buy rating and $56 price. Target on Altria Group Inc. shares in July, NYSE, MO. Altria Group Inc., NYSE, MO, had an EPS of $1.23 in the second quarter of 2021, exceeding projections by 6 cents. The company's revenue was $5.61 billion, up 10.9% year-over-year and $250.80 million higher than expected. Altria Group Inc., NYSE, MO, has risen 5.86% in the last 6 months and is up 23.9% for the year. By the conclusion of the second quarter of 2021, 47 hedge funds out of 873 tracked had invested $948 million in Altria Group Inc., NYSE, MO. This compares to 38 hedge funds with a total position worth of $1.1 billion in the previous quarter. What do you think about our video? Let us know in the comment box below. Please like this video and subscribe to this channel for our future updates. Thank you.